What in the world is an ALTA statement? If you're buying or selling a house, you've probably seen this term pop up, and it can look pretty intimidating. But don't worry, I'm here to break it down for you in plain English. Think of it as the financial report card for your real estate transaction. So, let's start with the basics. ALTA stands for the American Land Title Association. The ALTA statement, also known as a settlement statement or closing disclosure in some contexts, is a detailed, itemized list of all the money changing hands in a real estate deal. It shows exactly where every single dollar is coming from and where it's going. For the seller, it calculates your net proceeds. That's the final amount you walk away with. For the buyer, it shows the total amount of cash you need to bring to the closing table. Why is this document so important? Transparency. Before the ALTA statement became standard, closings could be a confusing mess of hidden fees and surprise charges. This document puts everything out in the open. It ensures that both the buyer and the seller understand all the financial aspects of the deal before they sign on the dotted line. It prevents last-minute shocks and helps make the closing process smooth and predictable. It's all about making sure everyone is on the same page and the transaction is fair and transparent. Now, let's dive into the nitty-gritty. What exactly is on this statement? It's typically split into two columns, one for the buyer's debits and credits, and one for the seller's. A debit is a charge, an amount you have to pay. A credit is an amount that's been paid on your behalf or is being reimbursed to you. For the seller, you'll see the agreed-upon sales price as your main credit. Your debits will include things like paying off your existing mortgage, any prorated property taxes, real estate agent commissions, and your share of the closing costs. The final number at the bottom of your column is your net profit. For the buyer, your biggest debit is, of course, the purchase price of the home. Other debits include the cost of the title insurance, appraisal fees, loan origination fees, recording fees, and your portion of the property taxes. Your credits will be your earnest money deposit, the loan amount you're receiving from your lender, and any credits the seller has agreed to give you. The bottom line shows the exact amount you need to bring to closing, usually in the form of a cashier's check or a wire transfer. It's crucial to review this document carefully before your closing day. Your lender is required to provide you with a version of this, often called the closing disclosure, at least 3 business days before you close. Use this time wisely. Compare it with the loan estimate you received when you first applied for your mortgage. Check all the numbers, spellings of names, and the property address. If you see anything that doesn't look right or that you don't understand, ask your real estate agent, your lender, or your closing agent immediately. It's much easier to fix a mistake before the closing than after. And here is a pro tip for you. If you want to get a head start and familiarize yourself with what this document looks like, I've got you covered. You can download a free legal template of an ALTA statement by visiting our website. The link is right there in the description below. It is a great way to see the format and get comfortable with the terminology before you in the hot seat. I hope this helps demystify the ALTA statement for you. It's a key part of the home buying and selling process, and understanding it gives you power and confidence. If you found this video helpful, please give it a thumbs up and don't forget to subscribe to our channel for more real estate tips and tricks. Thanks for watching, and we'll see you in the next video.